So tomorrow we have the big bad wolf coming to town. What do we mean by the big bad wolf? We have, that is tomorrow, Friday, October 6th, by 1:30 p.m. UK time, we have the NFP, the non-farm employment change and employment rate coming out tomorrow. And of course, we are bound to have some volatility introduced to the market. And the volatility, as usual, is something that tends to cause spread to increase, tend to have slippage, and we tend to have some other things, whipsaws, and a few other things that occur during that period. So this is just a quick warning, so that you know what is around the corner and you know how to approach it. You can also check the previous releases. As you can see, last month, right? For the month of September, it was 187K. Now we're expecting 171K, right? But then if you check the folder here and then scroll down a bit, we can see what we had last month, where we had 187K, which was actually good for the dollar. And that's why you have it as color green. This one was bad for the dollar. So we'll be having some variations of good and bad. Even before this period, we've had so many that were that were good. Going back to last year of May, we had a lot of them green, but now we're having some slight red here and there. So what are we going to be having come tomorrow? Is it going to be good? Is it going to be bad? And don't forget, this is based on the fundamentals. We always say when you are placing trades, you combine with the technicals. Fundamentals and technicals go hand in hand. So with what we're going to be having tomorrow, right, which of course I'm not a soothsayer, I'm not going to say it's going to be good or bad, but what I can say is that based on what the chart is telling me now, I'm going to show you the chart now for the USD, that is the USD index, and that is the DXY as well, depending on the broker that you are using. You have that over here. If you look very well, for a while, the dollar has been appreciating, has been bullish. And if you look at it from the daily time frame perspective, we had a breakout of this range, of this long-term range. But looking at it from the hourly time frame, especially based on the news that we have coming out tomorrow, it is now at an area of interest. And let's see whether this area will hold even going into tomorrow. Because here, as you can see, was resistance. And then when it broke out here, it became support, acted as support, came back, acted as resistance over here. So clearly, it's in the area of resistance. It's in the area where you would find sellers. So if you want to sell because of where it is now, I wouldn't advise you chase the market. Maybe wait for a pullback to this place and then you get your trigger. Your trigger could be in any price action candlestick formation. It could be like in the hammer or pin bar or engulfing, or maybe a doji that ends up being inside bar, maybe double inside bar, triple, or whatever the case might be. And then from here, you get your trigger and then you take it down to this area of support, which means that if you're also considering buying, this would be the area to look forward to buying. So you need to be able to understand what the market is trying to tell you, especially looking at the fundamentals, because the news, as we always say, is a catalyst. The news is a catalyst because price already knows where it is going to. For me, I'm expecting price to go back to this area of interest that we can also call a flip zone, where we have resistance here, support, and then support here. So this could as well act as support again. Has acted as resistance and support in the past. Why not, if not, when it gets back to this point, right? It's just the manner in which it is going to get to. And also, you can consider that price could always do the opposite. And that's why if you're in a sell on this dollar index already, your stop loss should be somewhere above here and your take profit should be here. So your risk to reward ratio should also be good, where your reward is greater than your risk. And then you take the trade and then accept the outcome. That's it. So once again, we have news coming out later tomorrow, the non-farm payroll by 1:30 p.m. UK time, we need to pay attention to that because it is going to be volatile and you wouldn't want to get caught up in the wrong side. And if you are one of those traders that you are trying to straddle the market, be careful of whipsaws because they could easily pick up your two positions. And if you have stop loss for the two positions, it could also easily knock out the two, right? So if you're a scalper or intraday trader, pay the most attention to it because most likely as a scalper, you might be using small risk, right? Small stop loss that you might not even put it on the chart. But then because you didn't put it on the chart, the movement is a bit larger than what you were expecting, and then you have bigger losses or maybe even crash your account. These are the periods where traders tend to crash their account as well. So I hope that the little information that we have given you is going to help you to approach the markets the proper way. I repeat, I hope that the information that we have been able to share with you now will give you that heads up and help you to manage the trades properly. In order to avoid unnecessary losses, the best way I would always say is do not trade. So you don't have any directional bias, you don't have any thought process, no analysis whatsoever. Sit it out and watch it from the sidelines. Okay, so with that said, I want to say thank you guys for joining me. That's indeed been a good one. Enjoy the rest of the day. Trade safely. Goodbye and God bless.